The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. It is Jobs Friday, and we have the month of November jobs total, and you're looking at a number of 227,000 jobs added in the month of November. You get a slight revision from where we were in October. Remember, the October payroll numbers came in. Let's pull up the headline as we break it down, okay? So we just got November payrolls, 227,000 jobs. Strong number. Unemployment, 4.2%. Now, here's what I always say, right? Give us some more decimal points. To Bloomberg's credit, I was watching them getting ready, coming on the air. They pushed a little further. It was almost 4.3. Okay, so they round. You're at 4.2% on unemployment. You have 227,000 jobs added. Now, remember, the October number originally was 12,000 jobs added. And people thought that we were probably going to get a revision that would bring that number, and I don't want to say dramatically higher, but that maybe there was an anomaly going on there. Okay, and there is an anomaly, but whether not quite as much as they maybe imagined, the revision brings it up to 36,000 in October from 12,000 in October. Okay, but look at where we are. Now, as I look at this chart, and what do I see? I see since March a series of lower lows and lower highs. And you could even make that case going back to when we were adding pandemic jobs in 2022, right? When everybody was coming back on the payrolls after dropping off. Nonetheless, you come in at 227,000. Last month is revised to 36,000. Unemployment sitting at 4.2%. You see where we are. And again, we were at 3.5 for a long time, almost 2 years. Hard to deny that there is not an uptick there on a trend, right? Even though we're at 4.3 in July, you dip down to 4.1, 4.1. You factor in we had 36,000 jobs added in October. We now have 227,000 jobs added in November. Healthcare leading the way at 54,000. Leisure and hospitality, 53,000. Government at 33,000. Retail trade, a decline of 28,000 heading into the holiday season. What's up with that? Thanksgiving, later than usual this year. Some stores may have held off on hiring, is how they put it, right? So maybe you'll see a surge there, as in these are November numbers, and as we all know, we just lived through it. November, Thanksgiving this year falling on the 28th, third to last day of November. And yeah, so that tightens things up. Maybe you'll see some of that hiring come in December. I don't know. That's kind of a hope and pray strategy. Not quite what you want to be going with. When you talk about wages, okay, 4% on a yearly basis is what we're talking about with wages. 0.4% on a monthly basis. Both of them a little hot as to what the market was expecting. Again, though, right, the path is on the right direction. And we always talk about, now these are year-over-year percentage change in hourly average earnings, and I believe this is for people who are staying in the same job, okay? And it is always interesting, folks, as in, you know, the other side of this coin here, okay, is that, man, it is easy to talk about inflation and prices that are through the roof, okay? And it's amazing how the human mind works, right? We all know that you always want more, right? No matter how much money you have, you're always going to want more. It's human nature. The grass is always greener on the other side. All of these things that we all know are truths, okay? And we all battle all of our lives to not focus on the negative, to focus on the positive, right? Don't let perspective can be everything, all of these things. But it happens all the time, folks, okay? Sometimes it's easy not to realize how good you have it and focus on the bad. And I'm getting big picture here, okay? But prices are huge. But man, you look at these wage numbers and they are huge numbers. People are making 20 to 25% more than they made 4 years ago. That's it. It's there. So don't think these prices are coming back down. That is a strong number in the economy that's helped carry this through. You look at the numbers, you're talking about almost 6% over 2 years ago in March of 2022. So let's say you're making 100 grand, you're all of a sudden you're making 106 grand. Okay. The next year, yeah, you're all the way back down to 4. We'll just call it 4%. All right. Now you're at 110 grand. And then you got another 4%. You're at 114 grand. That's just 3 years. You add in one more 5% number in there, and you're at 20%. Right. So this has been in a generational inflation deal, but we have seen, and that is what happens. Okay. It is what happens. And sometimes wages don't keep up, and you can make the case that they have not kept up. Okay. There are many items in the grocery store that are well over 20 to 25% more than what they were prior to the pandemic. But it is important just to keep in mind, when people say, I'm not making more to pay for all this stuff, you say, well, you might not be making more, but overall, people are making 20 to 25% more money. Now, that's just people staying on the same job. We just got ADP, right? ADP is still saying private payrolls on Wednesday, if you change jobs, 7+ percentage pay increase. So Chairman Powell is going to be watching that one as well. But nonetheless, we take these numbers and we take a look at the markets, and what are we dealing with right now? Oh boy, we got a little bit of a reversal going on in that gold contract right now. So let's put it back to a 5-minute chart. Yeah, gold actually spikes higher on that news to 26.65, and you're giving it up. Okay, let's go around the course though. First, you go to the S&Ps. The market, they like this. Why do they like this? They like it because the Fed might have to cut, okay? So the S&Ps, they're up by 9 points. You jump over to the 10-year right now. We have higher price and lower yield. You got the 10-year up by 12 ticks at 111.18. That's correlating to a 10-year yield right now of 4.14%. We were at about 4.22 yesterday, 4.14%. We take a look at this thing on a longer-term basis. We're bumping up against the 382. Here we go. It is interesting, right? Where do we make the lows? We make the lows on the election. Everyone's saying there's going to be tariffs. There's going to be deregulation. That's going to be inflationary. And meanwhile, what's happening? Well, since then, we actually have higher price and lower yield. That was the peak in yields, folks, the day after the election, November 6th. Election day, November 5th, we find out the winner that night, Trump. Market opens the next day. Lower price, higher yield, and since then you chop around and the move really begins, and now we're talking about a 10-year at 4.14%. Now, we have lower yield. What's that doing to the dollar? Look at this reversal, though. We'll see what happens. The first move's always not the move that holds. We know that. We're going to see how this market reacts. The market, equity markets, they like this number. S&Ps are up by 10 points right now. Now, we got some juggernaut earnings out there as well, man. We'll jump around. Why not? We'll jump around to everything. How about Lululemon? Athleisure. We're going to open at about 375. So we're chopping around at where we were basically for the middle of last year. Lululemon, you're going to open up 8% on their numbers, strong outlook from Lululemon. And Ulta as well, among many others, trading higher by $40, more than a 10% pop on Ulta shares. We jump around. You got Tesla shares trading higher, 375 from 370. You jump to the big dog, Apple shares, basically flat. Amazon's been on quite a run. And yeah, you're going to open more than $1 higher yet again at Amazon, trading at $221.68. And how about Uber and Lyft yesterday? So Waymo is coming to Miami, and the market did not enjoy that yesterday, digesting some of those losses. But we'll talk about it all, folks. We'll get back into some of the action. We'll talk some gold. We'll talk some jobs. We'll talk some yields. We'll talk it all. Stay tuned. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We get the S&P up by 7 right now. All the markets slightly in the green. You got Bitcoin back under 100,000, trading at 99,475 right now. You got crude. How about it, man? We almost got a 66 handle this morning. 67.60. If you didn't catch my interview with Teddy Kegstad on Wednesday, he said some great calls, folks. Head on over and check out the Tiger Forex report. Check it out this weekend. He's been dead on so many of these areas. And yeah, check out this dollar again, right? Rejecting the $70. He's talking about maybe the upper bound 70 to 72. We reject that $70. And, you know, I say it all the time. You don't have to be a master technical analyst to look at some of these charts and see where support and resistance lie. This is a daily. And yeah, we again are coming down to the lower echelons of $66 to $67 right now. Crude down 70 pennies at 67.59. And we keep our eye on yields right now, as we're up about 10 ticks right now, and that is correlating to a yield as we're putting it out at about 4.14. Let's see where we're sitting right now. Yeah, 4.14%. And the dollar may be the most interesting thing going on today. As you get a spike all the way to 105.42, we're back to 105.80. Now the markets, what's interesting, right? Markets are holding the first move. But markets are not holding the first move when it comes to rates and the dollar. So interesting when you think about where this is going. If anything, that jobs number could be interpreted as a little weak and a little hot on wages, right? The wage number on a monthly basis, 0.4%, 0.1% hot. On a yearly basis, 4% wage growth, 0.1% hot yet again. So wage numbers a little hot. They were thinking the revisions might have been a little bit more for the month of October because we only had 12,000. They revised that up to 36,000. That's all. The point being, how are equities holding this if the bond market and the dollar, in particular, the dollar, right? Because yields are there, I guess. It's just the dollar. The dollar, man, it's been its own beast sometimes. We'll see how it trades on a longer-term basis, bumping up against resistance at 106 to 108 level, basically 106 to 107. And yeah, we're trading at 105.86, but it's catching a bid right now, the dollar. And you're actually above where you were coming into that jobs number at 8:30. Remarkable. All right, we'll keep our eye on that one for sure. Now, if you're trying to head over to TFNN, folks, we got a server issue. They cut a line. Yeah, I was talking to my server guy this morning, our server guy this morning, and it's remarkable how this stuff happens, man. This is not a small company we use, but nonetheless, they got a fiber that was cut in Richmond, Virginia. You got Cogent, who's they're the backbone of the internet, man. They lease some of those lines, and nonetheless, so we have a cable that's literally down, and I'm looking at an update here from our server administrator. And, TFNN is hosted through Shopify, but then we have our own server, and what happens is that that's an issue right now. It went down at about 2 p.m. Eastern time last night, and they're working on it right now, and they're literally out there digging up lines and splicing cables is how they're doing it, and they're hoping to provide us an update at some point. But yeah, they're excavating 2 lines, splicing together hundreds of fiber strands, and that a boring machine cut into a lumen fiber line, and Cogent leasing those lines, and this is outside of Richmond, Virginia. So what's going on is, unfortunately, the TFNN website's having some issues, folks. But we'll be live. We're live on YouTube. You can check it out. We're going to send out the newsletters best we can, just basically sending them out like we used to. My dad started TFNN. I remember all the emails, they just went out via email. That was it. They went out via email. Everybody got blind carbon copied on the same email if you were a subscriber, and that's what's going to try and happen this morning. So Jacob's on that. If you have any questions, feel free to reach out. And in the den, of course, we'll be in there. But yeah, pretty interesting. You wake up and we got server issues and TFNN having some problems, but hopefully that is resolved shortly. Thanks for the patience. All right. So we dig into the numbers, man. You talk about an acceleration for Lulu. They're pushing 378 so far this morning. Going to catch quite a bit. We got the S&Ps up by about 5 right now. And pulling up that story, jumping around. Come on. Here we go. So Lulu out there crushing the world. Yeah. International growth helps offset slowing U.S. sales is the number there. Yeah. Yoga pants and belt bags. Is that what they got? So 287 versus 269. Revenue above as well at 2.4 billion versus 2.36. Lulu is expecting 3.48 to 3.5 billion is the number. Now the market was looking for 3.5, so right in line. Earnings per share 556 to 564. Basically on the high end of the expectations. For the full year, they tightened the revenue guidance and raised it by just a hair. So a slight uptick there is what they're talking about. 10.45 to 10.49. You can see they were previously looking at 10.38 to 10.48. Okay. And how about China for growth, though? This is the burying the lead of this article. Okay. Comp sales grew 4% during the quarter. Ahead of 3.2 was what the market was looking for, lifting sales across the overall business here. Behind that number, 2% slowdown in the U.S. I just told you, they grew comp sales at 4% across the entire company. Well, in the U.S., you're dropping 2%. Why is that? How about a 25% increase internationally? Boy, if you ever see Lulu taking the international stage like they've taken the U.S. stage, you better watch out, man. Revenue grew 2% in the Americas during the quarter and 33% internationally. See that? Yeah. Now, the Americas are their biggest market. International, a fraction of the overall revenue. But, boy, you start seeing that type of growth and they're contributing. I think that's why you're seeing the market accelerate higher when you're pushing 377 for Lulu this morning. It's a big number, man. All right, we jump over to Ulta, as they get a big number as well. And we pull them over here. Yeah, it's just across the board, man. Right? Now, you talk international. This one is not an international story. Full year earnings, 23.20 to 23.75. Previously, they were 22.6 to 23.50, right? For the full year, comp sales, 1% down to flat, okay? Comp sales metric, yeah. They beat on earnings. They beat on revenue. Yeah, they have been underperforming, which is why, retail's been the story here. So they got a wicked lineup. This wicked's everywhere, right? Tommy thinks it's Halloween going on still, and I have to tell him it's just a movie. But it looks like Halloween with the witches, etc. But nonetheless, they got promotions going. Customer transactions growing 0.5% year over year. And you got Ulta trading higher coming into the opening bell. All right, folks, stay tuned. It's going to be an interesting one. How's the market going to digest this jobs number? We got yields lower, but we actually have the dollar flat at 105.76. We're coming back for the opening bell. Don't go away, folks.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open with the S&Ps opening up about 9 points right now. NASDAQ 100, you're up by 32. The Dow up 105. You catch a bid, and you got the Russell leading the way up 0.8% at 24.19 right now. Yeah, and remember, the Russell is most rate sensitive, right? The Russell, you have a lot of floating rate debt in the Russell, smaller cap companies. So they are more prone to that as we go. And look at this yield. We got the 10-year continuing to drop in yield right now, as we are up now almost 13, we'll call it 12 ticks to the upside. And that is correlating to a 10-year yield of 4.13% right now. Quite a number. All right, you jump around to what else we have going on. So we've talked about our jobs numbers. How about Canada, man? And this is where, you talk about, we're at 4.2% right now. 4.2%, okay? It's good to have some context here because everybody wants to go back. We have recency bias where the market was at 0% interest rate for so long, right? I mean, I remember our man Larry Pesavento going on the air saying it doesn't make sense at negative interest rates. I don't understand it. That's not how markets work. It's not how markets work, folks, okay? You either consume or you save. That's economic fundamentals. You consume, or if you save, you get to consume more products in the future because you're saving, right? That's modern. There's the C and the S of economics, consumptions and savings, consumption and savings. Nonetheless, okay, we're at 4.2% right now. Everybody wants the Fed to cut. That's because we were so low for so long. If we weren't so low for so long, there wouldn't be this need to feel like we need to have the 10-year. The 10-year is approaching 4% right now, folks. This market's on fire. I think that these companies can handle 4% cost of equity over a 10-year period. So then you jump to Canada. We're at 4.2% unemployment as of today. Canada, 6.8. Could you imagine what would be happening right now if we were at 6.8? Could you imagine the political discourse that would be happening, let alone everything else in the markets? The unemployment rate is at a 3-year high, okay? 51,000 new jobs. Public sector, 90% of jobs added. We all know that's not a recipe for future long-term success. And they're talking about big cuts coming down the line, and that would make sense. Now, what's interesting here is, and this is, Teddy had a great conversation as well, talking about it's not necessarily maybe our dollar that is showing strength or weakness. It's some of these other dollars that are contributing, not necessarily even the euro, okay? So after that release, their 2-year yield, and we know this, our 2-year yield, the 2-year is very predicated on where the Federal Reserve or, the Bank of England, Bank of Canada will be over the next 2 years, right? Short-term rates are very much determined by the central bank. The 2-year rate dropped 8 basis points after that number came out, okay? 50 basis point cut is what's probably coming down the line next week. At more than 3/4. Yeah. They don't word that very well. It means there's a 75% chance that they're going 50 basis points from a 50% chance. Okay? Now, you jump to our chances, and they have gone up for a cut as well as of today. If we've been following the show, the odds yesterday were about 75-25 that we were going to cut by 25 basis points. This number now means that 12 days from right now, when the Federal Reserve meets on December 18th, my sister's birthday, that they're going to cut, and it changes nothing. Where do we go from there, though, right? This is the most interesting. You go out to June. So let's just assume, and it's not a guarantee, folks. There's still market pricing that we do not cut, okay? But let's just assume we cut, and let's go out to June. The market's still thinking there's a 10% chance that we're sitting right where we are as of 12 days from right now on June 18th at 4.25%. Yes, the area with the most probability is 1 to 2 cuts over the next 4 meetings after December. Now you go to September, 375 is still the biggest area. Okay? You go out to December, finally you get over. I think that's it, right? Yeah, look at. You go out all next year, so let's just assume that we get the cut in December, 12 days from right now, this month. Okay, let's just assume the Federal Reserve cuts 25 basis points. The market's pricing, almost a 7-to-1 probability that we're going to get a 25 basis point cut in 12 days. That brings us to a target range of 4.25 to 4.5%. The market's telling you, though, folks, that over the next 7 meetings after that, basically all of next year, we might get a couple cuts. Maybe we get 1, maybe we get 2, maybe we get 3. That's quite a number. They're on pause, and we'll see where we go. The reason why I bring it up is because, so where does the risk lie? Okay, they're going to be sitting at 4.25% in 12 days. What are the chances they have to go up from there? What are the chances they have to go down from there? You start seeing some weakness, okay, and you start seeing some weakness in the economy, like the number that we got for the October payrolls of 12,000, only revised up to 36,000. You better believe there might be a chance that we get more than 1 to 2 cuts next year. And that's where this chart on a longer term basis, okay, when you were down here at 109.13 and you had the 10-year sitting at 3.66% and the market was pricing in 5 cuts next year, I said to myself, how are you going to bet that the other side of that market's going to come in? And what we see either way, right at the 382, so keep your eye on it. But yes, not many cuts priced in right now. And there is a distinct possibility for this market to get a little bit skittish when we're talking about 6,100 in the S&P's record territory across the board right now. Okay, and meanwhile, last month we only added 36,000 jobs. And the household survey, a little bit weak. What is going to be interesting on the dollar, though, okay, no matter what, let's say we do need to cut. Let's say we cut in December, and realistically, what was going to happen? Well, we were going to be cutting, and the Fed was going to be on a cutting path. The dollar might not trail off as much as you think when you're comparing it to other currencies, like, for instance, the Canadian dollar that's in big trouble right now, right? They have huge unemployment. The market thinks that they're probably going to cut by 50 basis points next week. So people are not going to be buying Canadian dollars to access Canadian debt at a very low interest rate. Even when we're cutting, we're going to be the best game in town, which is why you probably have the dollar sustaining the strength that it has, sitting at the 105 to 106 level. Now, you take that and you jump over to the gold contract, and yeah, priced in dollars, that's a tough one for gold as you continue to hold up well. And we've had gold sell off this morning on that news to 26.49. And what do we got? Lows out there of last night at 26.35. Yeah. All right, we take a look at Tesla. So we got somebody from the PayPal Mafia. They're going to be running AI, and they're going to be working in the administration for, we'll jump to it, folks. Okay, stay tuned, folks. I'm coming back right after the break. Markets in positive territory. We'll be back in 3 minutes. Don't go away.
To take charge of your financial future, TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, He has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&P up by 11 points, right at 6,100 on the dot right now. And yeah, that name I was looking for, David Sachs, AI and crypto czar, is what he's going to be. So that was a little bit of a lift. Trump saying venture capitalist David Sachs, AI and crypto czar. I wonder what he's going to do. Is he going to guide the administration's policies for AI and crypto? Some of that work includes creating a legal framework for crypto, as well as leading a presidential council of advisors on science and technology. Now, what's interesting is I was reading out here this morning. What is it? Bill Dudley had one talking about, he had an opinion piece. Where is it? Oh, I'll find it. I was just reading it. Bill Dudley had an opinion piece talking about how it's not a good idea. Yeah, here we go. And whether you agree with stuff or not, folks, I read opinion pieces all the time of people I don't agree with. That's the best way you enlighten yourself, is to, communicate with people you might disagree with and try and understand why you could possibly be on the wrong side of things, right? But so a Bitcoin reserve would be a bad deal for Americans. And this has been talked about. It's kind of part of the run-up. Trump has talked about it, okay? And this is not some end-all administrative policy. Trump does it, whatever, okay? This is not, nothing to get worked out about. This is why elections matter. If he wants to do it, whatever, not the end of the world. But it is interesting when you think about loading it up versus, if you said to me right now, okay, for what should America do as a trader, load up on Bitcoin at 100,000 or add to the strategic oil supply at $67 long term. Okay? Right? Think about that. What's the play? Man, I'll buy oil all day longer term at $67. And yeah, it doesn't mean that buying crypto might be the play there. But what they talk about here is that you're going to run the price up yourself, right? If this happens, think about it. What's the expression? Buy the rumor, sell the news. Okay? In this case, the government is the rumor, but they don't get to buy until the news comes out. So everybody else has bought the rumor that the government may build a reserve that Trump has talked about, and then they're going to buy the rumor and sell the news when the news actually comes out. There's just so much optimism already built into a price of Bitcoin at 101,000, folks. Now we see it. Hey, maybe it's at 200,000 in no time, okay? But yes, what they talk about in here, what Bill Dudley talks about, and he makes good points. It's just something to consider. Doesn't mean that crypto is a bad thing and we shouldn't endorse it fully. But boy, when you talk about adding a reserve that we're going to start building at 100,000, I don't know if I think that that's a good use of tax dollars, considering where we are right now. For what it's worth. Now this is, so I agree with the premise of the opinion piece, right? But he talks about a lot of hogwash in here as well. Good points. Bitcoin hardly qualifies as money because the volatility makes it a poor medium of exchange. I would agree. In most countries, people don't have to accept it as payment. That's definitely true. Transactions are slow and expensive. Disagree tremendously. Requiring significant computing power and energy to validate each one. Yeah, the backbone is doing things, okay? But one of the things that has driven, how does he get away with that line, right? Transactions are slow and expensive. Now, he's talking about probably comparing things to Wells Fargo, Bank of America, where you send a transaction overnight. It's basically free. They're all getting their money somehow, okay? And what they say in here is that it doesn't, where is it? It's not like a normal asset class that it accrues interest or dividends or anything like that, right? You know what I thought of on that one, though? That's going to happen with Bitcoin. Okay, there's no reason why these financial giants are not going to figure out a way for people who are holding Bitcoin to somehow be accruing interest. There's no way that's not going to happen sometime in the near future. But yeah, we're going to get to see this happen. But be careful at Bitcoin at 100,000 short term, folks. Long term, I would agree. It's going higher. They're around. They're not going anywhere. Speaking of going higher, S&Ps making all-time high. Oh, we're not quite there. We missed it by a point so far. Come on. We're going to get it? There we go. All-time highs as we speak. 6107.75 in the S&Ps. NASDAQ 100 doing it as well, up by about 0.5%. Now, talk about Tesla. So they're up by 1.7%, $375. Folks, Tesla has 3.2 billion shares outstanding. Okay, 3.2 billion shares outstanding. I think Elon owns about 20% of that company, maybe. I know I was finding an article earlier in the year about it, about 20% of that company, okay? So what would that put it at? About 600 million shares somewhere in ownership and options that come down the line as well. He's got 300 million in options, I think. He's got shares on top of it, okay? So he's got a 20% stake, and what's remarkable is they talk about this piece in Bloomberg, okay? And it's politics, of course, but it ties into business. When you got, politics is business. When you talk about this type of an accord, you better believe that it relates to business. When you have a man like Elon run these companies that are accelerating higher on how the politics play out, it's a paltry number when you compare it to what he's dealing with. 274 million. All right, and listen, it's a big number, and I'm sure it helped. It's not like he bought the election. Not even close, okay? But yeah, it helped. You better believe it helped. It all helps. But it's not like he bought and paid for that election. I think Trump probably wins it without him. You do want to make sure you keep track of these numbers, folks, because I've always said to friends, associates, it's actually amazing people in this type of echelon don't put more money in. And they do that we don't even find out about, okay? But it's a drop in the bucket when you think about this is akin to, so he's worth 300 billion, he puts 300 million in for simple numbers, okay? Just drop 3 zeros off. That's all it is. So if you're worth $1 million, that's like a millionaire contributing $1,000 in a political campaign cycle. To put that in context, okay? Now the real kicker though is that the number's 274 million. I just told you that he owns about 600 million shares of Tesla. So what's he need? He needs a 50-cent move in Tesla to validate his entire political action spending for the entire election cycle. A 50-cent move. Well, folks, Tesla was at 138 in April, and to be fair to the election, it was at 248 coming into the election. You're up $125, and he's got, what'd I say, 600 million shares outstanding, 125. My goodness. That's a lot of zeros. $75 billion on $275 million. How do you like that risk reward? How do you like that risk reward? Tesla, and that's not counting what he's got going on with everything else, which is skyrocketing as well. Just in Tesla shares, just on Elon, $75 billion just since the election for $275 million spent. I think he believes with what he was doing as well, but just on a straight dollars and cents, man, those political dollars. One more segment, folks. Don't go away. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's up by 18 points at 6107. We just hit an all-time high of 6110. You jump over to the NASDAQ 100, you're talking about 21,607. NASDAQ 100 up by 0.6%. The Dow barely in the positive, and the Russell positive by 8. We check back in on yields on that jobs number. You get the 10-year. I got to update that one. We're talking about higher price, lower yield as odds of a Fed cut increase coming down the line December. What do you have? Higher price and lower yield as the market pricing in some Fed cuts on potential weakness. 10-year sitting at about 4.13 right now, and you jump over to the dollar, holding up well, 105.79 right now, and you get the gold contract right now trading. Down at 26.55. Yeah, United Health, that shooting, man. Boy, look at this. Yeah. So one of the things that I was just reading this article earlier this morning, and I'm going to talk about it briefly and end the program. And one of the things they were talking about here is that, that'd be a brilliant move to be a distraction from a true motive, okay? I think we've all maybe heard that some of the casings, the shell casings, had delayed, deposed, which are definitely terms to do with healthcare and insurance. But it would be interesting if that was some kind of distraction. Nobody knows the real motives, but of course, what is happening? Yeah, insurance is in the light, and you're seeing that trade lower by 3% as they're going to be under the heat, and that's where the political discourse is going on. Look at that week. Whew. Is that all? Yeah, that's all in the last 3 days. Look at that one. He put it on a weekly. You talk about a bearish engulfing back to July. And, I had brain surgery in April, folks. I dealt with it, and when I fortunately survived that surgery and did well, I came back on the air, and what did I say? I said, you got to fight every single step of the way, and you do. You're dealing with medical issues. Get in there and fight, folks, because it is a battle. And United Health probably coming back to 550. The highs of last year, the highs of 2022 as well. This market on fire. Folks, thanks so much for tuning in on Friday. Stay tuned. We got Basil coming up next. We're going to get that website back up. They're working on it, but we're live all day. We're live in the den. Have a great Friday. Have a great week.